That's great to hear. There we go. Got Evan up here. Let's go ahead and set that. Get bullish up here. Cool. Good morning, everybody. Welcome. We're just going to take a minute. We do actually have all of our speakers up here, but just going to let people file in for about a minute. And then we are going to get started with some of the breaking news from the weekend, and then we'll go into some of the stocks we'll be talking about and hopefully charting. But it's looking like an interesting open. I see it as a little mixed. Looks like oil is doing pretty well still. Hitting some maybe 1 year highs, maybe more. What's going on, Evan? How's the morning going? Think. All right.
Sorry, man. My bad. I was just getting the tweet out. No, listen, my morning's been good. I cannot lie. I forgot to set my alarm last night, so it was a little bit of an 8:30, 8:45 wake up. Probably closer to 8, but we didn't get the script as made before as we normally do. But I was thinking about it. We never get to our script. These things always, they peak in value when we go off script and kind of just have real discussions. So I have a couple stories for us as normal as always, but I'm excited to have a free-flowing discussion. It's looking like a mixed open, but I am seeing that crypto is like right before this spiking higher. I saw Dogecoin moving just kind of like straight line upwards. It's still down on the week, month, whatever, but on the day plus 6.6%.
Cool. Well, that's a good way to cover up not having a script. I like that approach. For sure. Okay. All right. I'm going to go ahead and put out this tweet. And in the meantime, I think we can get right into things. Looks like we already have a couple hundred people joining us. So hope everybody's having a good morning wherever they're at. If you're on the East Coast like us, we're excited for this 9:30 a.m. market open. If you are joining from anywhere else in the world, it is a pleasure to have you. Evan, you want to start off with some of these news stories?
Yeah, I got a couple news stories for us. We got
And
a couple.
there's
Yeah,
like a
go.
little bit of it's like an AC or something, or like a fan in your background, perhaps.
Yes, that was just fixed and should be
That's
off now. Sorry
There we
about
go.
that.
Lot better. Thank you.
All right, perfect. Okay, thanks for letting me know. If anything like that happens again, just either send me a DM if you're in the crowd, or Wolf or anyone, just let me know. I'd rather the quality be perfect than my ego be a little bit hurt by cutting off if it is, which it isn't. But a couple of news stories that I got for us today. Well, I'm going to start with the ones from today and then move over to the ones that kind of encompass the last weekend. First, I have a lot of Tesla stories in front of me, so I'm going to skip them and do them all at once at the end. Tattooed Chef, which is a meatless meat or whatever you want to call it, competitor to Beyond Meat. They announced today that their 6 of their entree bowls are now available in about 1,200 Publix stores. I don't have the number in front of me, but I believe it brings it to their stuff is available in about 13,000 different supermarket locations. I know I saw a couple of people responding to my tweet and a couple other tweets talking about how that they hope that Tattooed Chef might start advertising a little bit because they don't do much, but we'll have to look into that. Another big story that I know a lot of people, especially the apes, will care about is AMC came out with some numbers on how their box office did this past weekend. The numbers were pretty much post-pandemic best, which, I empirically went back to look at how the box office was doing during the pandemic compared to pre-pandemic, and it's not even close. So these post-pandemic records are still significantly lower than it was before, but in this environment, you do want to see improvement. So it's still nice. But so AMC said they had about $90 million in domestic box office sales, and this was mainly due to the Venom movie, which just came out this weekend. They said that they had about 2.4 million people visit an AMC theater in the U.S., and then about 1.4 million internationally, bringing the total up to 3.9 million viewers this past weekend. And that was a new post-pandemic record. I don't have the previous pandemic record in front of me, but like I said, these numbers are still, improving. But when you look at what it was pre-pandemic, we are still nowhere close. The box office is not back yet. I'm not saying it won't recover, but it's a fact to say that it's not fully back yet. Keeping it moving, I have a couple General Motors stories in front of me. So GM announced a partnership with Wolfspeed, ticker WOLF. I believe that ticker used to be, or it just changed to Wolf from Cree. I see Wolf. You lost your potential future ticker. Would
I
love for
thought it
you
was
guys to have
I
that.
thought it was already taken. I thought it was an OTC because I've been eyeing it, you know?
So I don't fully know how it works, but all I do know is that I saw this morning that Cree, ticker CREE, transitioned over to Wolf, and now they're known as Wolf Speed. So that's
Well,
what's happened to that.
everything has a price, so
Listen, in 3 years, when Wolf Financial is the only thing that you think of when you say Wolf, this will be your ticker. I'm saying 3 years for that, 5 years for the Wolf IPO. Let me get invested. All right, but I will keep it moving. I slipped in a quick water sip in there, but so GM. First was that Wolf story, and then another story I heard was an activist investor engine number one. They got into Chevron, Exxon. I believe Exxon was the one where they were successful in forcing forcing concessions. They got board seats. They got a bunch of stuff like that. They are an activist investor that tries to push companies towards more green and switching away from fossil fuels and everything like that. So it looks like they are reportedly set to announce a stake in General Motors. It's according to the New York Times. You know, GM and the entire car industry is one that is shifting over to EVs. It feels like it's happening pretty quickly now, but it also kind of feels like it's a lot more words than actions at this point. Yeah, they're shifting and it will take time to scale up, but it still feels like we are in the phase of still announcing what they're going to do. These companies are coming out and saying we're going to have 20 EVs by 2025 and we're going to be fully whatever by 2030, and it's less action. There's been less cars on the road, less growth, less whatever. So it definitely does take time for this stuff to happen, but it'd be cool to see more action and a little less words. It feels like a lot of these companies see what's happening with Tesla's stock price and other EV names, that they're getting really, really crazy high valuations. And a lot of these, you know, legacy names, General Motors, Ford, it feels like they've picked up a lot of announcements surrounding EVs, clean energy, and everything like that. And from my perspective, it kind of felt like, you know, definitely this is the shift they need to go, and this is something they needed to do. But it definitely felt like they're milking the headlines to get some of that value, some of that increased value that, you know, the new EV names are getting, but the traditional players really were not getting for a while. You know, when you look at PEs or whatever ratios, I know it's very different with a high growth company and an established name. Like it's really, really hard to compare. But when you just see how the companies were being valued, EV to traditional car maker, it was night and day. So it really feels like these big car names saw that and just started to crank up the headlines more than anything else. You know, they are definitely making that shift, but we're in the headline phase right now. Big story that I know a lot of people will care about. It's actually, honestly, truthfully, not that huge, but it is a big stock that everyone on FinTwit loves, and it's Palantir. So Palantir came out and announced today they were awarded a continuation of their current contract with the NIH to provide clinical data for COVID-19 research. So the contract has an initial task order of $7.9 million over the first 5 months, but the contract does have a maximum total potential value of $59.5 million over 2 years. Sorry. But yeah, so with this type of contract, you never know how this stuff is going to play out. But generally, when it's you see this news and it's them continuing a previous contract, my head instantly goes to that they're going to fulfill the full 2 years of it. But we'll have to see going forward. As I look, I see we're at 9:30 right now. Slip in one really, really quick story, and then we'll get into the open. But the Hong Kong Stock Exchange has suspended trading in Evergrande, or Evergrande, whatever it's called, and its property management unit. So those are both listed on the Hong Kong Stock Exchange, not here, but they were both halted trading last night. Wolf, I'll throw it back to you quickly for the opening if we got anything.
Yeah, 9:30 a.m. Also, you didn't throw in any Tesla story, so I will throw in one Tesla story, and that is that Tesla delivered a record 241,300 cars in Q3. So that is good news to see
After
that.
the open, I want to come back to it. I got a couple more too.
All right, no worries. Okay, so just watching the open real quick. We don't get the heat map from FinViz up until around 9:45 a.m. usually. So right now, just basing it off of just looking through the market, and it does look very mixed to me. Again, I do see more negative than positive. I'm looking at Tesla's up 2.75% already. There was a massive, massive bullish pressure from call options that were sitting there. So we'll see if some people on that do take profit and we sink back down towards maybe closer to even. And then let's see some of the other big names. So Baba set a new all-time low just when you thought it couldn't go any lower. It set a new all-time low. I think Baba's sitting at 141.47 right now. So that is pretty terrifying. See that continue to drop. I'm sure it takes out a lot of confidence in these Chinese companies and other companies that are in China, like Futu and TIGR, also both down 4% and 2% respectively. So not a great day for the market coming from over there, but growth is also getting slightly hit. I'm looking at some of the popular growth names that we talk about, like Celsius, that's down about 2%. Let's take a look at Upstart real quick. Upstart, that is also down about 2%. So there seems to have been a pretty even dip across a lot of these names. Apple also down about 0.37%. So I'm seeing pretty red open, and the ones that I saw starting in green are also leaning towards red, besides Tesla, which is up about 2.6%. That's kind of the green that I see, but then crypto is also doing pretty nice. Evan pointed this out, but Dogecoin, if you look at about 9 a.m., they had a pretty sizable spike of about 3 cents, which is about 8% for the currency. And so that is up around 23% at 23 cents. And I think that Bitcoin and the others are kind of continuing a decently green weekend. They're each up a little bit, about 1%. So that's what I'm seeing at the open, but this red is starting to weigh down on my crypto. Evan, do you want to add something, or should we go to bed?
Yeah, so a quick couple things I also saw. So when I looked at the heat map behind me on CNBC, it was about 2 to 3 in the red. So it was definitely about 66% of stocks looked about in that range. When I'm looking over at my portfolio right now, I'm definitely seeing, the FinTwit, the growth names, the mega cap names mostly down besides Tesla. And then my more boomer names, National Beverage, JP Morgan, Madison Square Garden, ticker MSGS, Constellation, Coca-Cola are all up. So it's definitely again, it looks like it's shaping up to be a rough start of the day for the FinTwit people, but there are parts of the markets that are definitely moving higher.
Yeah, and I'll say this is pretty in line with last night. If you looked at the futures, the Dow was up about 1%, the S&P 500 was up about 0.8, and the Nasdaq was down about 0.3. That's as of like midnight last night, so obviously it could have changed. But just basing off those, we're seeing this hits attack, but then the components of the Dow are still doing pretty fine. Ben, pleasure to have you joining us as always, becoming quite the regular on here. Would love to hear your thoughts on the open.
Great, good to join you. I've got my eye on Tesla early. You guys shared the stories on the numbers, and that 800 level looming large above. Want to see if it can push through there. Like you said, a lot of call interest last week, a lot of big bets at that level. So just below that level now, but definitely on my radar to see if Tesla can push through. I think if it does, that helps the entire market, certainly NASDAQ components and tech in general. So early on, want to see how that holds. I'm encouraged that with the NASDAQ down early and kind of a weak open, Tesla hasn't really come in from the open. It's still sitting right there, just below 800. So good sign there, but would really like to see it push through. And then obviously that kind of goes hand in hand with oil. Oil breaking out and oil stocks, they just remain on fire. I was hoping maybe we would get a little bit of a pullback to be able to add a few more, but Matador, LPI, Murphy, Fang, I mean, just that whole group of those oil and gases stay hot. They don't come in for very long when they do, and then you have oil itself breaking out. So a couple other things on my radar. I'm watching apps which held up real well. Digital Turbine, APPS. Want to see, and there goes Tesla, by the way. It's through 800 now.
Yeah, just popped.
Yeah, and want to see if how it held up really well in the pullback. I kind of have a descending trend line right there that it's dancing around, and it's another one that. It's one of the growth names that I kind of look to help guide with what's going to happen with some of these other growth names that have been hit kind of hard and now trying to recover off the bottom. So had a descending trend line right there, anchored VWAP off of the high, plus year-to-date anchored VWAP for apps. It's sitting right on it, and kind of has a little flag pattern there too. So I want to see if that can come out of there. Outside of that, I noticed hotels and resorts, some of the casinos that aren't Macau-related FLL, HGV, Vail Resorts, MTN, Marriott, MAR, all of those getting a lot of attention last week. That whole group, very, very strong. So have my eyes on those two to see how they act early in the week and how they respond. I'm assuming this is just part of the grand reopening trade, and they got a lot of attention last week. A lot of heavy call flow there as well. So big bets coming into there. What else have I got for you? Oh, I've got a couple biotech names. I personally don't trade biotech, but a lot of my followers do. HRMY, Harmony Biosciences, one that I like that's kind of flagging up high, ascending triangle, or a pennant type formation up there. And another one that has this biotech, Horizon, HZNP. They actually have some fundamentals behind them, which most don't, which is why I avoid them. Kind of VCP formation up high, 111.33 pivot, a descending triangle there. That one's had a nice run. And like I said, there's actually, with that one, there's actually some fundamental behind that. Their sales were up 80%. Their earnings growth is last quarter was over 300%, and they're going to make, I believe, earnings was about $4 and change this year, and almost $6 for next year. So it's kind of one of those unicorns in the biotech space where there are actually some good solid fundamentals behind it.
Absolutely. So coming in on some of those, yeah, the biotech ones, I was trading more during last year, but I kind of, got hit in some areas, and I think I took a step back to like really want to understand the stocks that were in my portfolio. And then on some of the others that you mentioned, so Tesla, I see didn't hold 800. And if you're looking to pull back, it's at 793. And then talking about oil, yeah, so the way I've been following oil is mostly through Gush. So GUSH, that's the double levered daily S&P oil and gas exposure. So I thought that one, it's ready. It's flying over the past 2 weeks. Can I throw a couple other names out there for you, Ben?
Yeah, with Gush, I watched that one as well. You're right there at the century mark, so kind of a big level there. If it pushes through 100, you've got some resistance just above. It's been 103 in the past, but you're right there again at that century mark.
Yeah, 100 just seems to be, that round number that just provides resistance in and of itself. So it should be interesting to see. Okay, so a couple of other names. So Evan mentioned Palantir, and that's obviously been a real popular name. But look at these, last, few trading sessions and just what's happened through the 200-day, through the 50-day, down another 4% today. Palantir trading at $23.33. Seems very range bound between 20 to 30. Is this something that you have been trading or any interest in?
Yes, actually, I was trading it. I got stopped out on what I had left early last week. I really wanted to see kind of that 25 level hold. We have a big volume shelf built out there, and it's still May. It's early in the week. I kind of look at these on the weekly chart, but really wanted to see that kind of 24, 25 level hold. You're below that now, but again, it's 9:40 on Monday morning, so it has all week to kind of change and recover and try to recover that volume shelf. But what a volume shelf is, that's a big area of volume by that price. So there's a lot of interest at that level. So below that level, it can act as resistance on the way up, because you have a lot of people there sitting there saying, if I get back to even, I'm going to sell. And on the other hand, if you can push back above that area of volume, they're feeling pretty good because they're in the green, and when the majority of participants are in the green, that's what gives you that confidence that it can move higher. So you're kind of dancing right below that level now. But like I said, it's early in the week, and have to see how it closes later on, how it closes out the week, and what that weekly candle looks like, more so than making a judgment early on a Monday morning.
Got it. That definitely makes sense. And Evan, if there's any names that you want, feel free to cut in. I do have a couple of others. So SoFi is another one. Love to hear your thoughts on. We've, I think, talked about this in past weeks. It bounced off of the 21-day, kind of off the 50-day. It's still above that volume ledge around the 15 area. I know people were looking for this to potentially drop under 15 as an ad from some watch lists that I saw, but right now it's sitting at that 1646, 1645, pretty much exactly flat on the day. And it's still, pretty decently under its 200-day. Any thoughts on SoFi here?
Yeah, it's kind of pinched in between the 50-day acting as support, which is now turning up below. That's a good sign. And then it recently, only last week, printed a 200-day moving average, and that kind of acted as resistance initially. So last week you saw price come right back down, retest the 50-day from the top side, but that area held, and now you're getting a little bit of a bounce since. So the next thing you want to look for is if the market can get healthy, is can it reclaim that 200-day moving average? That's kind of a dividing line for buyers and sellers, where we say the buyers, are in control above that 200-day moving average, sellers in control below. So that's kind of what you want to look for next, is whether it can reclaim that. It's a ways up from here, roughly around 1760, but it can move quick. And this is another one of those names where we're seeing a lot of heavy, and it's on both sides. The call's been a little heavier than the puts, but seeing a lot of heavy options activity there, big bets. This is another one that from the fundamental side looks good. 80% and 64% revenue growth the last 2 quarters. And Dan's right about, if the estimates bump up another penny, you're going to be positive in EPS for 2022, which is always a good sign. So there's a lot going on there, more than just the technicals. The fundamental side looks good there, and just a matter of whether it can push back above that 200-day. You have a anchored VWAP off of the high, what we call confluence, right at that level at about 1750, 1760. You have anchored VWAP off the high, you have year-to-date anchored VWAP, and you have the 200-day moving average all right there. So if the market can get healthy, there's a good chance that area can act like a magnet for price.
Love it. Definitely appreciate that analysis, and always, so clear and accurate. Another one that's had an immense amount of volume over the past week is Snapchat, down another 4% today. This is one where there's not a ton of volume. If it continues to break down, it already broke through that volume shelf at 75. I think there's people that are looking to add, from what I saw, at around 70 in that area, but it is below the 50-day now, but still far above its 200-day, which is all the way down at 62. Any thoughts on Snapchat here, which is still going lower as I talk, now down a little bit over 4%?
Yeah, you're coming into a trend line that goes back to the May low. So you have the May low, you have a tag in July, and then another about 30 cents you're going to be there today. Below that, I see horizontal support. You've kind of had this consolidation from when it had the power earnings gap. That's just below 70. I have a 69.90 support level there, horizontal support. And this consolidation, basically since the power earnings gap in July, that's been the low. So you've tagged that area a couple times and it's acted as support. So first you've got the trend line there, which let's see exactly what that level is. That comes in at about 71.50. So not quite there. And then 69.90 below that, that's horizontal support. But yes, you've now pushed below the 50-day moving average, below the 65. Again, I kind of like to, I don't like to give too much weight to that early on a Monday morning because a lot can happen between now and how it closes out the week. But certainly something you want to be aware of if you start to see more of these growth type names that were leaders going back, leading the last rally. If they're starting to break down, close below the 50-day moving average, especially if that comes on a significant increase in volume, that's usually a sell signal and one that we want to pay attention to.
Got it. Got it. That makes sense to me. That is one that I am continuing to watch. Maybe some potential adds to that with Snapchat. It's been fascinating to see the run up. Okay, I'm going to throw out one more name, and then Evan, I will turn it over to you if there's anything else that you want to do. I think we have Peter coming on at 10, but it's just Peter, so we should really still have time to kind of go back and forth and have more chatter. So the other one is going to be Upstart, and this is a pretty popular one. So actually, the Q3 FinTwit contest that I was helping run with Jonah, that ended last week, and we were going through, and like all of like the top 20 place winners all had Upstart in there, right? It was a 153% gain during the last quarter, and that's UPST for anyone who's interested in checking that out. And Upstart, I see, just broke through the 21-day, which isn't as powerful typically as something like the 50-day, but there's also like really little volume from what I'm seeing, like on those volume ledges up here. So I don't really know where to go with this. I'm still just holding my shares. I've been holding since $130 a share. So I'd love to hear some of your thoughts on Upstart here.
Well, first, congrats. It's been a great run. I mean, really has been a great one. Basically, after earnings, you went from, what was that, about 160, yeah, mid 160s to almost 350. So yeah, a fantastic run. I think coming in and consolidating here, maybe building out a little base up here is healthy. It's come a long way in a short period of time. So any consolidation up here, you like to see that volume. You mentioned the volume lightening up. You like to see that when the stock comes in, because that means those buyers back, like yourself, back from 150, 160, from those levels, they're not in a real hurry to sell despite, the weakness in the general market. So you like to see it kind of consolidate, move sideways on light volume. Then once the market kind of gets its footing again and looks healthy again, and growth starts performing a little bit better than it has been, that's when you like to see it come up the right side. And that's when you want to see the volume come back in, is when it starts to form that left side and then the bottom of the base. You like to see that volume really dry up. And then as it comes up the right side, that's where I start to look for pocket pivots. That's the highest volume over 10 sessions coming up the right side. Love to get an early entry on those type things. So that's kind of what I would be looking for with UPST, is for that to volume to dry up even further as it carves out the bottom of new base, and then watch for that volume to pick up again as it starts to climb up the right side. But first, it needs to settle down a little bit. Wouldn't mind at all to see it move a little more sideways. We just talked about the 50-day moving average. The 50-day is down below 230. So if it can move sideways, that's 55 points away. Kind of let that 50-day moving average catch up to price. A lot of times that's where the big institutions will come in and support it. So that can happen in two ways. It can happen by price, where UPST comes down to that level, or it can happen in time, where UPST goes more sideways, carves out that base like we were talking about, volume dries up, and then it allows the 50-day moving average to catch up, and then we can see if those institutions come in again to support it.
That makes a lot of sense. To see a little bit of consolidation here and move sideways. It has had a crazy run up. So real quick, to the 250 people listening, if you are as impressed with Ben as I am, you should click in his profile and take a look, because the man is sitting at 99,000 followers, 99,100 actually, 99,120 if you want to be exact. And it would be amazing if we could get him to 100,000. So all he needs is really just a few hundred followers there, 900. So I think that we can make a big push. I'm certainly following him. I know Evan is as well. So I would say, if anybody's here and you're not already following Ben, make sure that you are. We love promoting our speakers, but specifically Ben, who is almost at 100,000 here. And also big shout out to our listeners coming in here, taking some time out of your morning, right? If you put in the time and the effort to listen, to engage and things along those lines. It really does go a long way. I see a few specific listeners, a couple quick shout outs to Duke, and then also my mother is in the crowd. Shout out to Mom. I'm sure, I'll throw out a couple of her favorite stocks for you, Ben, so that you can, you can chart them for her. I'm sure she'll appreciate that. And then shout out to my mentor, Dr. Rachel FinTwit herself, who is here as well. So shout out to a few powerful women in the crowd. Ben, can you take a look at SKLZ? It's having a tough day. SKLZ is down another 5% almost today. It's having a rough time. So what's like, could there be any good news here for anybody that, maybe holding a lot of SKLZ?
Boy, I wish I had good news for you. It's got to get back above 10. I mean, that's a big psychological round number, just like we were talking about with Gush at 100 for Sklz 10. That's kind of the psychological number that you want to see it back above, and it's been there several times before. I see a couple times that it's tested and bounced. Actually had a run from 10 back towards 14. But again, this is one of those that revenue's not bad. I mean, we're increasing there. You had 95%, 92%, but they don't make money. And that, when the market's correcting, it's tough for these revenue growth names to make upside progress because they don't have the support of earnings and the cash flow behind it. So a little more speculative with these names when they don't have earnings, and you really want to see, if you don't have the earnings growth, you want to see the revenue acceleration. And one of the things with Sklz, we had that going back into last September, December in those quarters, but you've gone the other way the last few quarters. You've gone from 95% growth, 92% growth to 52% growth. Normally, if you don't have the earnings and the market's correcting, if it's going to hold up and really outperform and see relative strength, you want to see those revenue numbers going the other direction, accelerating to the upside. And a lot of times that makes up for being negative on the earnings per share. Having said all that, you do have kind of a wedge, a descending wedge there that can be bullish, but it would definitely need to recover, and we probably need to see, like I said, the general market start to act healthier and recover as well. But the first thing I'd look for there before anything else is for it to reclaim that $10 level, because that's going to be a big psychological area that kind of looms large if it stays below there for any length of time.
That definitely makes sense. So at this point, we now have the FinViz map, so we can take a look. And Evan, how about Facebook getting absolutely annihilated this morning? Down 3%, and we sold that call on Friday. God bless, thank God. The only really green I'm seeing here is Tesla, Merck, GM, Ford, I guess that whole auto manufacturer, and plus Merck, and then a little bit of chemical stuff. But Evan, what's your thoughts on this initial look at this just pretty down day for some of the big names?
Cool. Awesome. A couple things. I want to go into this and then maybe get into Tesla quickly. I still have those stories after. So once we're done with this FinViz look. But yeah, you're giving us too much credit on the Facebook thing. Normally, a lot of times we've had decisions where we kind of just do it together and see, like, should we? And the Facebook one was totally you, and it was the perfect decision at the time. We had a bunch of people
actually
tell us.
Gerg. Actually,
It was
Gerg.
Gerg? Okay,
Yeah.
perfect. I was going to say, we've had a bunch of people tell us, like, yeah, you probably should be out of this, where I probably wouldn't have even taken it. And we were kind of sitting our hands a little bit, just seeing what was going to happen. And then Wolf finally decided to pull the trigger. And I'm very excited for that. As everyone can see, Facebook is down about 3%, like Wolf said. When I look over at the heat map, it actually has a little bit more green in it than I was expecting. This is 15 minutes delayed, so that could have a little bit into it. But the mega cap names are down besides Tesla. And most of them look like they're down over 1%. And then when I look across the rest of the board, everything else seems, minus the mega cap names, it looks like the majority is in the green today, which is really interesting. A lot of it is those energy boomer, whatever type names that maybe a lot of people in this crowd don't have. But there's an interesting breadth. I'm just going to quickly go over to the market performance by sector, and it is currently 6 out of the 11 categories are in the positive right now. One of them, industrials, is up by just 0.003%, so that's like nothing. 0.03%, sorry. Energy is leading the way at up 1.3%, followed by utilities and basic materials, and then consumer defensive as well. So, like I said, those little bit lower growth type names, and then trailing today, lagging today is communication services, which is down about 1.4%, and the technology, which is what I'm sure the majority of FinTwit and the people in this crowd are in, is down 1.3% so far today.
Okay, pretty interesting. Do you want to go into those Tesla stories?
Yeah, perfect. Great timing. So before I do get into that, I did make a nice graph, a nice chart for bullish rippers. I pinned it at the top here. So what it is Tesla's Q3 delivery number since 2012. It's on a nice chart. So if you want to see how they've grown over the years, click the pin tweet or click the green raccoon, click into that profile, bullish rippers. They actually sponsor this spaces, so make sure to give them a follow. I tweet from the account, and I've put a lot of work in it. We just passed 5K followers, a lot of Tesla stuff. But yeah, check out Bullish Rippers. But with that, we're going to get into the Tesla stories. They delivered a total of 241,300 cars last quarter. That's up 73.2% year over year from Q3 2020. The mix of deliveries was about 9,300 or so S and X's, and then 232,000 Model 3s and Model Ys. So just looking at those numbers, I think it's really important to frame about what type of stuff is selling, and it's not the luxury cars. It's the I'm putting air quotes up here, cheaper, more affordable cars. Like Teslas are still expensive. There's no way around it. But these are the mass produced, mass whatever cars. And one thing that I do want to point to is it feels like a lot of the names that are coming up, like yeah, there's the GMs, the Fords, whatever, coming out with cheaper names, or in quotes we'll say, but a lot of the names that I'm hearing right now are luxury cars. And even when I look at Tesla, like they're selling 9,300 a quarter, like it might go up, it might go down, but it's not the biggest market in the world. So for me, EVs, we need more people competing in the Model 3 and Model Y range, and hopefully for them to come soon. But yeah, so they reported 241K deliveries, up from 145K. When we look at 2021 as a whole, the first 3 quarters, they delivered a total of 627,000 cars. That is up 97.1% year over year. For them to reach that 1 million car mark this quarter, they'd need just over 330,000 cars. I did some math about the growth rates that would needed from last year's Q4, and it's just under about 110% growth. Just for some overall context, Q1 they grew by 109%, Q2 they grew by 122%. So it is possible, but I don't see it happening. I think they're going to fall short. When you look a little bit deeper into the numbers and the growth rates, Q1 and Q2 of last year, there was a noticeable bump in Q3 and Q4, so the comps are a little bit lower. I expect there to be another growth, but to see the type of growth you would need would be pretty crazy. You know, I'm not an expert in this space, but when I look at it, put a fair growth rate. Last quarter grew at 73%. I used Q4 of last year, multiplied it by 70%, and I got around, I want to say, 310,000 cars around there as the delivery number. So the run rate there, whatever they'd be going, would be over 1 million. But for 2021, it looks like they would probably come in around 960,000 cars delivered. So I don't see them making the 1 million car mark this year yet, but they're going to come close, and who knows, that last second production push could come in nicely. So in reaction to Tesla's delivery numbers from over the weekend, we had a couple analysts come out with the reports this morning. My favorite one is JP Morgan. They love to they are definitely Tesla bears. I feel like they're the ones who started out at that $95 price target back in the day, but they've moved it up a couple times, still very, very bearish on the name, but now they are at a $215 price target on Tesla. They moved it up from $180. They did maintain their underweight rating. I did see 1 or 2 more price targets changes for Tesla. We had Royal Bank of Canada increased it by $10 to $755 their price target, while maintaining their sector perform rating. And I believe Cowen also did one as well. Let me just get that in front of me. Yeah, it looks like Cowen raised their price target to $580 from $562. I think they were either underweight or market perform. I want to say market perform, but definitely not bullish on Tesla. So there's actually, like I said, there's so many stories that came out with this. I saw another one that came out talking about how the National Highway Traffic Safety Administration rejected a 2019 petition to open a formal investigation into Tesla vehicle fires, according to Reuters. So that's interesting. It feels like we've had a lot of things combining together today to force Tesla green on a very, very red day for similar type names.
Definitely plenty of volume and action there. Will be interesting to see where it goes. I know that there's plenty of backers, and when you look at, I think that a lot of what's driving it is some of this bullish call option, and there's just insane volume on some of those. So yeah, keeping it green. Any other news?
Yeah, a couple things came out during this call, actually. So I haven't been able to do the deep dive into it, but I'm seeing a headline now that DraftKings announced the expansion of its second largest office in the U.S. at Uncommons in Las Vegas. That's just a headline. I'll have to dig deeper into what it actually means. But also during the call, Ford came out with its delivery numbers for September. They said that they sold 156.6 thousand cars in the U.S. during September. That's down 17.7% from last year. Just one thing to point out. When we're looking at these delivery numbers, like, Ford's delivering 156.6K cars per month, and Tesla's, doing about 200 whatever K per quarter. There is still definitely some scale that Tesla has to breach. Like when you look at Tesla's numbers up 70% and Ford numbers down 17, you can see where the valuations start to come in. But there definitely is some more scale that Tesla needs to come, and they're building it up. But yeah, Ford came in at 156.6K cars. They now have about 150,000, more than 150,000 F-150 Lightning reservations. They sold about 9,100 EVs during the quarter. I think they sold about 1,700 Mach-E's. I wasn't able to find where the rest were from, but sorry, not for the quarter, from September. So they sold 9,100 EVs in September. And then I'm also seeing another story that's popping up right now, that Netflix is bringing a play something button to their mobile. So it's basically just gonna give you a randomized shuffle to kind of like help you. I've had this problem a lot. I don't know if other people in the crowd have, but when I go to watch a Netflix show, sometimes it's really difficult to like find something to watch. So maybe having this randomized shuffle button could help. I envision just finding a lot of terrible stuff, but maybe the algo or whatever they do, they link you stuff that you have a 99% connection or whatever that number is up there. But it's interesting.
Hey, real quick, I want to get your and Ben's thoughts on this account that is on Twitter and is growing just incredibly fast. And it's called, Ben, I'd love to hear your thoughts on this. It's called the Nancy Tracker. It's at Nancy Tracker, and it's Nancy Pelosi Portfolio Tracker. This account was started in August and has 82,000 followers, but it only had 62,000 followers 3 days ago. So they went up 20,000 followers this weekend, and their basic goal is to kind of get like Congress audited, and they're just basically releasing a list of all of specifically Nancy Pelosi's personal assets, and also anybody in the crowd. This has nothing to do with politics. It's strictly to do with, trading within the government, and just, people trading on insider information regardless of party. So I'm just interested in how fast this account is growing. Do you guys have any thoughts on that?
If I couldn't miss, I'd probably have 200,000 followers by now too, but occasionally I get some wrong. It seems like those in the higher power, they can't miss. And when that's the case, yeah, something's not quite right there. If some of the best traders I know are hitting at 60%, and the senators and the speakers, they're coming in with impeccable timing at all of the turns, at the top, at the bottom, both in individual stocks and the market as a whole. Yeah, something not quite adding up there to me. They would be, if they were on FinTwit, they would definitely be the stars of FinTwit. Because they never seem to get them wrong. And it doesn't matter whether they're trading the common stock, they're buying options, they're doing both, and always get it right. So, yeah, it doesn't surprise me that an account like that would grow very quickly, especially if they were trying to keep tabs on and mirror, the actions of those up top there.
Yeah, it does look like it. Yeah.
So you go. Sorry, I was just gonna add a thought.
It is also being run by somebody who is fairly competent. They're a former hedge fund guy. They spent 5 years on buy side looking for highest alpha. They met with hundreds of management teams, and they're just like looking at it, I think like you are, Ben, saying like, how can somebody have this like 100% success rate? There's got to be something to that. So they're definitely just they're tracking everything. I mean, even their newsletter, which is called the Alpha Letter. Sorry, Peter, getting some feedback on your end. The Alpha Letter, they got 6,000 subscribers this weekend. So clearly people want to know. I mean, I turned on notifications actually for this account because I figured I'm just interested to see what's happening. And also, they're very worried about getting banned. They think that the government's or somebody's going to ban them. It sounds like Facebook's already been taking steps to ban their account on Facebook. Evan, what were you saying?
So yeah, two things quickly. One, Alpha Letter. If you're on FinTwit, there is someone else who that's their newsletter. You could dig in a little bit and find who they are pretty easily, I think. And then quickly, you actually understated it a little bit on how quickly this account has grown. Thursday, they had 10,000 followers, and now they're at 80,000, well over 80,000. So this account has blown up 70,000 followers over this past weekend. It does have someone popular running it who has other ways to push it, but the levels this account has blown up is pretty insane. And I could say with Bullish Rippers, we've thought of some stuff on the back end of how we can maybe jump on something like this in the future. I'm not too passionate about the Congress trading, and it's not necessarily political, but it's just not something I get super passionate about. But there's so much energy behind it that maybe next time the next Suez Canal or the next Evergrande or the next Archegos thing happens, I have an account with like 20,000 followers on it that I don't use. Maybe we repurpose it a little bit and see if we can funnel into it. So it's definitely caused a lot of thought on my back end. I just got another message from Peter that he can't hear me again. So I don't know. There's no one else I have this problem with, but it's me and Peter for some reason.
Yeah, just something about that connectivity. So Peter, Evan has been talking, and he just mentioned that you can't hear him. So I'll try to be the middleman here a little bit. But welcome, Peter. How's your morning going?
Hey guys, great to be here. Morning is going well. Had a couple of days off, got a little recovery and under my belt, went to the beach, but been watching the market and the action's been spectacular. Really, I find it fascinating. As you know, I don't really care if the market goes up or down. So, but to watch and try and analyze why the market's doing what it's doing. Last week was extraordinary. Last day of the year, huge sell side came into the market. And it was fascinating. And then to see the rebound on Friday. So there's a lot of news on the table. There's a lot coming into this last quarter, a lot of seasonal stuff, and the market's sort of fascinating. Thrilled to be here.
Absolutely. And Peter, just because we were on the topic, I'd love to hear your thoughts about this account. It's called @NancyTracker on Twitter, and they've grown by, like Evan just said, 70,000 followers in about 4 days. Specifically for people trying to follow Nancy Pelosi's trades. Do you have any thoughts on it?
Look, no, I think it's all horseshit, to be perfectly honest with you. I don't, that's just sort of, I think it's wasted energy. I don't, look, if you're sitting at home and you got nothing to do and you want to really focus on that, that's fine. You know what? Every day here is an amazing opportunity to really focus on what's going on, to try and learn why the market does what it does, try to make some disposable income, try to make some good long-term investments, to worry about what the heck Nancy Pelosi's doing. And all that is just a bunch of hype BS, in my perfect opinion. I don't like following other people's trades that way. I don't like using the internet as a financial advisor. I don't like using hope as a strategy. I think it's all BS and it's just ridiculous. I mean, obviously that means there's a lot of people with way too much time on their hands, and they should really get a grip on stuff.
Got you. So I'll bet I'm going to pose this to you and Peter both. You know, we had that kind of pullback last week. Looks like it may be continuing into this week for large caps. Peter, is there anything from maybe a macro standpoint that you're focusing on as this market, you know, continues this week?
Well, yeah, I mean, there's a ton of stuff really going on. It's just a matter of what stuff is actually going to affect the market or not. Look, you know, last week was a fascinating end of a quarter. You know, we saw a lot of outflow of money and sort of rotation of money on the last day of the quarter. We ended up having $4 billion for sale on the close. And if you look at the last day of trading, I mean, the market really cooperated on that trade. And that was basically when you see a quarter that with all the obstacles and all the anxiety in this marketplace, still be trading just a couple percent off the record highs, you're going to see some profit taking. You're going to see some posturing where people are going to hedge themselves up and buy a little bit of protection. And that's what you saw on the last day of the trade. But then, of course, you know, the media, you know, loves to rile into that thing and go, oh, my God, we're down 600 points. Is this the beginning of something worse? This is all this seasonality. We're coming into the doomsday of Black Monday in October and all that. And it's BS too. One day does not make a market. And then as you saw, you know, we came in the following day, and while the market was sort of skittish coming into the opening, and we did sort of open up a little bit and sell off. You know, we were on, David Green and I have our course and our Q&A on Thursday nights, and we were talking about hopefully they would give us a little bit more of a flush out, you know, on Friday, and that's what we ended up seeing on Thursday. I mean, on Friday, we were hoping that we'd get a breakdown to the 428 level in the S&P, which was a spectacular technical level, right? We were hoping that, look, after the market closed down 650 on Thursday, we saw a bit of a bounce back up to 431 after the close. And we were thinking, you know what? Maybe that's, you know, maybe the sell side's done. We're going to see back into a rally, people covering their shorts and whatnot. And the market did open with that kind of a posture. But we were really thrilled to see that further follow through on the sell side on Friday morning down to a double bottom at 428 level in the S&P 500. Then you saw the green light come in for all that fresh October money, and the market spent the rest of the day going up. Price action, guys, is the key to this market. There's so many moving parts. There's so much news. There's 70,000 people watching what the hell Nancy Pelosi's doing. So you know what? Let's take advantage of those idiots wasting their time over there and watch the technicals. Friday was one of the most awesome technical trades of all time. Double bottom at 428 in the SPY after a flush out on Thursday. We spent the rest of the day going up, 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 up. We ended up posting out $2 billion to buy on 2 o'clock on Friday afternoon. The trade was awesome. So there's China on the table. There's inflation on the table. There's seasonality on the table. But just watch what the market thinks of all this stuff, guys. Nothing is predictive here, right? There's so many players in the market. There's so much opinion. There's so many idiots watching Nancy Pelosi. These are opportunities that are absolutely generational to get in and out of trades, make some money, you know, position yourself for the end of it, for the next quarter. I'm loving every single minute of every day here.
I love the passion as always. So Ben, I'll kind of propose that same thing to you. You know, any thoughts on, I guess, what Peter just said, or kind of coming from last week into this week with the macro perspective?
Yeah, no, I think Peter's right on point there. You got to watch those technicals. The lows in the NASDAQ, 14,324, I believe it was, in the S&P, like you said, 428. You watch those levels. They hold, they bounce. Again, can have eyes on that for the NASDAQ this week. Look, there's so much out there right now. You want to watch rates. They're up today, but if you're also watching the dollar's down. Oil, energy, again, just absolutely on fire. So you can take all of those things and make a case and end up doing nothing because they all cancel each other out. But if you look at price, if you watch those technicals and look at how price is acting and what it's doing and where it's finding support, yeah, the story's different because on a day like today, The Dow's up, energy's up, dollar's down, rates are up, NASDAQ's down, growth in general is down. Tesla's ripping, it's over 800. You had an opening range breakout, hit 80, almost 807. So there's a lot of cross currents out there. What you want to do is find those ones where prices, and whether you're long or short, find the ones where price is moving in that direction, you know, and place your bet, place your stop, and then listen to price. If it's working, let it work, you know, let it go. I've been long energy for a couple weeks now. It's still working. I'm just sitting back and letting it wiggle at this point. So yeah, there's opportunities. There's definitely opportunities out there, but it's not those opportunities where you can just blindly buy and close your eyes and up it goes. It's not that kind of market. If you're an individual stock picker, though, there's definitely some opportunities.
Absolutely opportunities. Jessica, I brought you up. Pleasure having you back on again. Any thoughts on the conversation that we've been having, or perhaps anything from a macro perspective, or just generally, you know, what you're eyeing in the market today? I think she's up here, but I did kind of spring that on her after her being up here for about 5 to 10 minutes.
Oh, sorry. I was watching the market. You were talking to me?
Yeah. No worries. Just wanted to hear maybe what you're eyeing in the market today.
Sure. Yeah, you know, I'm watching retail. I was actually just having a discussion about what's going on there. Obviously, it's trading on probably the supply chain issues. It looks like there's not positive news, but I'm not seeing a lot of new lows made. You know, right now that's what I'm kind of concentrating on. I'm concentrating on this is a bad morning. What is not making new lows? Twilio, what did I note? Twilio did not make a new low. I'm not saying it looks good, but not a new low. That is noteworthy. I'm green for the day on Nike. That, you know, I've got, I did a lot of DD on, you know, retail and consumer brands. So, you know, I'm not seeing a lot of, I don't think I'm seeing any new lows. Ipar, for some reason, is green. I don't have a position there, but it's a perfume maker. For some reason, for the last month, it's not aware we've had a correction. It's been the strength is insane. It had a V-shaped recovery off the bottom there. It's one of the only stocks. It's just insane. Dutch Brothers is green. That's a new IPO. It's got a really small float. It's had a lot of strength. But anyway, that's kind of what I am doing today. I did take a small position in Nintendo. I know it looks like a falling knife. I'm not insane, but if you zoom way the heck out to the 5-year chart, it looks less like a falling knife and more like an opportunity. This is not an overnight trade for me. This is intended to be a long-term position, but you know, I noted DT, Dynatrace is holding, at least when last I checked, was holding the 21-day. CRM, last I checked, still holding 269 like a beast. I don't have a position in it, but I am watching it very closely. It looks like the big security names, Net, Crowd, and Fortinet, I think that's how you pronounce it, haven't made and Net and FTNT didn't make new lows. Crowd did, but it bounced. And we'll see if, you know, we'll see what happens in the rest of the day.
Yeah, it'll definitely be interesting. Appreciate the insight. With any thoughts on Tesla?
I mean, Tesla's acting like a beast. What else can you say about Tesla? It is acting like an absolute beast. Another company that's looking good. Again, I've been watching retail. SIG, which is SIG jewelry manufacturer, looks great right now for some reason. Not every, it's like they always say, it's a market of stocks. Not every stock is being devastated. For some reason, SIG, I think it's because of e-commerce. Analysts were positive on its e-commerce efforts. I don't know what's up with Ipar. It just, I mean, I'm telling you, look at, what's it, IIPAR? No, it's just IPAR. Look at the chart for the last month. I mean, it's insane. It's, I think the all-time high was about 80. It's back at 77. I'm not saying I would buy it here, but the strength is noteworthy. SIG, the strength is really noteworthy as well.
I'd love to chime in on SIG.
Please.
So we talked earlier about how when the market's in correction, you need either strong revenue growth, you need strong earnings growth. The ones that are negative tend to get hit the hardest. When you look at SIG, they're making $2 this year. Next year, that jumps to $9.35. That's 335% increase. Their revenues, and I don't, really follow exactly what's behind it, but their revenue growth 2 quarters ago was 2%. 2 quarters ago, 98%. Last quarter, 101% revenue growth. So there's actually a fundamental reason behind the chart why that chart looks so good in strength. You've got a forward PE under 10. That's really the only time I look at that. But when you have something growing like that and in the big picture so cheap, and then you look at that chart and you say, wow, not only is it one of the strongest stocks right now on the fundamental side, but technically you can see that reflected in the chart. And that's one of the things that I'm constantly looking for. Those stocks on the fundamental side that have that tremendous growth. And usually there's a story behind that. There's a reason why that growth is there. And then matching that up with a chart that looks this pretty technically, that 83 level, a pivot right there, cup with handle, very traditional cup with handle pattern. Yeah, that's one that's on my radar as well.
Well, thanks for the insight, Ben. That was super helpful, and I think it was probably really helpful for that was really helpful for me, and I think it's really helpful for everyone. Have you looked at VG by any chance? I was doing DD with a friend on that, and I mean, the chart looks great, so I wanted to see what was up with the story, and it looks like there's a good one. We'll probably put together a thread soon, just to tell everyone what we've been seeing. Just curious if that's been on your radar.
No, I don't know that one as well as SIG. That one I knew because it comes up on my growth screens. Yeah, VG not as familiar with. I see some growth there, but we're 13%, 22%, a big difference from what we were talking about with SIG, 300% growth, 100% growth. Yeah, just a different type of stock.
Got it. Real quick, I also want to bring back in Peter, who's been chilling here. And Peter, I guess what else can you speak to for this week, for your approach to this week, following up on last week? There's definitely some weakness in the market right here and some fear in the market. And I understand, you can play that with the technicals. For someone like David, who, is your partner and is the one who's trading the individual tickers, do you see him taking perhaps any bearish positions? Is he always taking bullish positions? Just how to, best play this market for somebody that is, a technical trader.
Well, I appreciate the question. Look, what was fascinating about last week was what happened on Thursday. Even the market got sold down so hard, was that the VIX was completely flat. So it was basically, that's why we sort of analyzed it as basically a profit-taking end of a quarter thing rather than a fear trade. Because normally, as you see what's happening right now in real time in the market, the S&P 500 getting smacked down to the 431 level, and the VIX are spiking up. And when you see that, that's basically people, buying protection against the sell-off that they think may be happening. I mean, I would have to defer to David. David has got a bit of a bearish feeling for the next month or so, just overall in the market, that it feels a little bit frothy. He sort of feels a little bit of a sell side coming in. But you know what? Look, for someone on a day-to-day basis, he's trading the market. He's trading price action. He's not really, look, as a long-term investor, David really believes that the markets go up long-term. On a day like, Thursday, you never look at your portfolio. You're only going to get upset. And otherwise, when we see this kind of rotation, consolidation, these are opportunities in stocks. I just, while Jessica and Ben were chatting, I kind of just pulled up a bunch of stocks. I was looking at Oatly. I was looking at the S&P 500. I was looking at SD Lauder. I was looking at SoFi. I was looking at this stock RSKD. It's an Israeli cybersecurity company. I mean, a lot of these companies are just getting whacked down with the market. Now, you can just look at this if you're long them like, oh shit, why didn't I sell them on Friday? Or you can just look at it and go, you know what? This is a time where you really put a shopping list together, right, guys? There's going to be fragility in this market coming into October. We obviously have Black Monday coming up. There is that weird seasonality. There is that weird psychology and about the crash of 87. It's kind of a curious thing, but October, though traditionally a little better than September, is a down-ish month. We've got to look into the coming into the end of the year. As an investor, I think people should have a shopping list together. Stocks have been so highly valuated, so frothy, so long in the tooth, right? There are names out there that I'm sure a lot of you guys, I'm not an investor, but that everybody's dying to buy. So this is, when Macy's puts a 50% sale up, you don't go running for the hills. You walk through the store and look for the things that beautiful leather jacket you've been dying to buy that was 600, that's now 375, guys. So, take this time that's why I think everyone should have two accounts. You should have your long-term investor account, and then you should have your day trading account if that's what you're into, and use technical analysis to create some fun disposable income. This is a pivotal time, guys, generational time. To be making money on a short-term basis here. If you're out there learning technical analysis, whether you learn it from David and I, Wall Street Global Trading Academy, learn it anywhere else, I think we're the most affordable. We do have a mentorship program. We walk you through the whole training of becoming a technical analyst. Guys, there's some wonderful opportunities. Whether you're trading the meme stocks, whether you're trading any stocks in a market that goes up and down the way these do, right? If you're not trading on technicals right now, I was reminded when Ben was talking, that I keep saying it, this is not your grandfather's stock market, guys. Fundamentals are great in a normal environment, but there's so many moving parts. And as Ben said, you cannot really, presume yields are going up, market's going to do this. We've got seasonality coming, market's going to do this. You've got a trade China, you've got China trade problems in China and energy stocks on the rise. You got to do this. It's a very crowded environment for a lot of opinions. There's so many new people in this market right now with a lot of opinions. So I beg everybody to take this wild opportunity to, not make decisions the way you used to make decisions. We've got a lot of information coming out of China relative to energy. I just read this incredible thing that it turns out one of the great little tidbits is that 1/4 of all personal wealth in China is invested in real estate. And that's why you saw all this fear coming out of the Evergrande trade that, oh my God, they're not going to make payments. You've got a lot of people in this thing. And then you've got the energy space. Energy's on fire. What's going to happen with that? Well, look, the Middle East is going to let this energy market fly until they're not going to let it fly any longer. And then one day we're going to wake up and go, oh yeah, we're going to release some inventory. And then this trade sort of turns south. So, You know, I'm a firm believer in using risk management to protect investments, whether you do it in the VIX, whether you do put a stop order in on every day trade you do. You know, this is an incredible environment to be making hitting some singles and doubles, guys. And that's what this is all about. It's once again price action. The next 3 months are going to be extraordinary with all the information and all the news coming out, whether it's the labor market, people going back to work. What did we see happen on Friday? Some of the biggest winners on Friday were the reopening story stocks. And I go to what Jessica said. She's looking at retail. Retail did not participate in the amazing reopening story trades, the cruise lines and airlines that rallied on Friday. Well, why is that the case? Well, there are some obstacles to the retail story. So you've got to look at each stock. You can't look at sector specific things because I think it's sort of there's some fragility there. So I look at price action. I look at technical analysis. I like to hit singles and doubles. I like people to take this opportunity to learn this, buy a toolbox, fill it with technical analysis. It's a gift. Volatility, technical analysis is really a gift when you've got this amazing volatility.
Absolutely. The volatility plus, access to all these amazing people who have significant experience and are willing to teach for free.
Giddy up on that, Gab. Giddy up on that.
100%. Okay, so there are a couple of individual names that I want to touch on. So I might do this back to Ben and Jessica. So one of them that is, and also Peter, an amazing follow for everyone that's listening. Peter is the most photographed trader, I think, in Wall Street history. He's got a Wikipedia page. You've got to be checking him out. He's working on NFT drops. He's up with the times. He's technical analysis guys. He's got the macro perspective. One of our favorites to have on this space. So thank you, Peter, as always, for coming on and just adding your really unique perspective.
Thank you.
Okay, so two of these names that I'm looking at, and would love to hear your thoughts, Ben and Jessica. So the first one is Afrm. So Firm, they're having a tough day. They're down about 6%, looks like. Is that correct? And, this is something, this got a lot of hype. They got bought by Amazon, I believe, maybe a month back, something like that. And since then, maybe even 2 months back. Since then, they've had a nice run up. They had that initial jump of like 45%, but then they ran up another like 40%. And they're kind of now maybe traversing a little bit sideways and having this down day. But, when I was looking, so I follow a lot of stuff that Jonah Lupton talks about pretty closely. And he sent out a little notice maybe on Friday, or maybe this was earlier than then, but he was just talking about how he really liked kind of the setup. So now that it's had, this drop here, I'm interested to see if perhaps there will be another setup. So I'd love to hear your thoughts, Ben.
I would say similar to what we discussed with UPST earlier. It's had quite a run, big run from when they double like that and go from the 60s to 130. It's healthy for them to come in, consolidate a little bit, pull back. I mean, we're doing a little more than that today. It's down pretty heavy with the rest of growth, and that whole group of growth tends to be weak today. But looking at levels, you had the gap. 101 was the high on that first gap of the news. That was the Amazon news. Then you had another gap. So you're coming in right now to the low of that second gap, and that second gap was on earnings. You're right there around 106, 105.60. So coming into that level, have to see if that acts as support. I like anchored VWAP there from the power earnings gap, anchored VWAP there from the news gap. You're just below both of those levels. So again, I have to see how it acts as the day goes on. Does it recover a little bit in general with the whole market? Because you're coming into some areas technically that can act as support. The 21 EMA is right there too. I like what's going on here from a fundamental and a macro perspective with them, but at the same, I know they have the deal with Amazon, they have the deal with Walmart. I mean, anytime you're linking up with those two, that's significantly good news. But from a technical perspective, it's another one that just needs to consolidate. It needs to form a base. It needs to go sideways a little bit, shake out these last of the weak hands, start to go sideways, and then, like we talked about, look for that volume to come in as it turns back up the right side. Comparatively, if you look at the volume in the gaps and what it did up the left side, volume is rather quiet on this pullback. So in the big picture, that's healthy.
Okay, that's definitely good to hear. And just got any thoughts on Affirm?
Yeah, I've been Affirm is one that was on my radar at the lows, so I am I'm fairly familiar with it. Everybody has their own style. If I'm if I'm looking at an overnight trade, I'm looking at what's strongest. But for long-term buys, I like big pullbacks. So for me, am I personally buying in here? No. I would probably just I would probably just for me personally, I would wait and see on this one. It had a big run, and there's still a lot of uncertainty out there. In terms of a long-term buy, I don't feel like there's any margin of safety here whatsoever. However, when the market finally picks an upward direction, then it's something that I would maybe look at again. I just, yeah, just for me personally, I'm not trading right now. I know my level. Trading right now is outside my technical abilities, and for a long-term buy, for me personally, there's just no margin of safety, especially with all this uncertainty and some big gaps. We all know that we all know what happens when a stock fills the gap. It can get it can get ugly, and sometimes sometimes it takes quite a while for them to resume an upward direction.
Absolutely. Appreciate the insight there.
I'd love to throw like another question on the Affirm topic. I don't think anyone up here will have the answer. Maybe it's more about buy now, pay later in general than just Affirm. But how difficult would it be for a company of Amazon's scale to, once it's successful, they test it with Affirm and it works, to just kind of make their own in-house product? There's definitely scales and levels to the type of company that can do this, but Amazon, Walmart seem to be the type of companies that could. So, maybe if anyone's in the crowd and wants to know, this is definitely much more of a question than an answer. I don't know if anyone would know it up here. But how difficult is it for those companies to implement their own systems, and is it even profitable enough for them to?
I don't personally have the answer.
Yeah, I don't think
Ben?
anyone. We don't have any Affirm or buy now, pay later experts. If anyone wants to take a crack at it, I would love it. But this is more a question, just I think, for people to think about, maybe do their own research on the back end. And if anyone does know, feel free to send me a DM.
Definitely. I do have a couple of other names. So I'm just really going through Twitter right now. I'm for anybody that's interested, I tweeted out and just asked what people are buying and selling. If you have bought or sold anything today, I would love if you would come and just comment that, because I really do look through all those comments and then I go and do my own research on them. So I did see a few people have added Facebook today. So we talked about Facebook a little bit earlier, but now it's down 4.5%, 4.32%. Down to 328. Let's maybe touch on Facebook again. So I saw Parrot said that he added on Facebook. I think, Ben, when we talked about it earlier, we talked about this 329 level. I'm not sure if you're kind of seeing the same spot for support, but it is coming closer to this 200 day, and there seems to be just like a little bit of gap of volume in between 327 and the 200 day down at like 315. So it could fall there, but I'm just really unsure here. But I see a lot of people getting in on it. Somebody in my comments showed that they had added it and that they created now 15% of their portfolio is in Facebook. I don't know. Is there an opportunity right here with Facebook being down 12% over the past month? Not something that you often see from Facebook.
Yeah, this is the level that I have marked, basically between 328 and 332. Big area volume there. That was the breakout area going back to the summer. And yeah, you're kind of right there again at that level, actually just below. But yeah, this is another one that, and we just have to to see, does it have a date with the 200-day? Is that, where the market's headed at this point? If you, we mentioned earlier those NASDAQ lows from last week. I believe we've taken out Friday's low. So when that's the case, you start to look big picture, the 200-day on the NASDAQ, sitting right there just below 14,000. Is that where we're, ultimately headed from a technical perspective? And you start to look at the bigger names like Facebook, which definitely looks like it could have a date with the 200-day, where it's a 200-day sit in 315. So that's 13 points lower from here. So basically another 4% down. Yeah, I mean, at the same time, they could make that turn at any point. So you just got to watch the price action, know your levels, have your stops ready just in case you're wrong. But that's basically the name of the game. You pick your spots that make sense technically. You place your bet, you place your stop at a level just below that makes sense, and then you let the market tell you whether you're right or wrong. And when I zoom out, I do see, quite a few stocks now that look like, we could be having a date with the 200 days. Let me pull up Apple. 200-day on Apple, 135. Right now you're trading 139. So to me, it does kind of make sense.
Okay. So it makes sense as for the sell-off or as an entry point?
No, that maybe that's the next level, because for example, like looking at Apple, looking at Facebook, they're cracking the lows of last week. So when you take out that low of last week, the next logical step is say, okay, well, where's the next level of support? So what we were talking about Facebook, you're kind of at that level now, but if this level fails or even just a little bit below this level, you have a window here from 329, let's say, down to the 200-day, which is the next, logical area of support at 315. So if this level holds and we recover, whether that means later this day or as the week goes on, that would be a great sign that this level held as support. But the problem with support is you never know if it's support and going to hold as support until after the fact. So we're here right now. We're kind of at that level that you expect with Facebook to act as support, but that doesn't mean it has to. So if it does fail as support, you kind of look and say, okay, well, what's the next level to look at? And from my perspective, that's, down around the 315 level and the 200-day moving average.
Okay, that definitely makes sense. I personally am not trying to catch the falling knife. I find it very interesting that the RSI is so low, as lowest it's been in January when it was at like $250 a share. But I would want to see some support from that 200-day, just with my own, more cautious trading style. One other one that I would want to throw out there is people have been commenting that they've been buying or basically going short on QQQ. So ProShares, Ultra Pro Short QQQ, that's SQQQ. It's down 62% over the past year. It's basically an inverse leverage. Any thoughts, Jessica? I'll throw this one over to you first. Any thoughts on people that are buying into something like SQQQ?
I hope anybody who is doing anything leveraged, I hope they are very sophisticated. And if I feel kind of the same way about shorting the NASDAQ, which is historically pretty strong. I think I just hope you're not YOLOing and you know what you're doing.
Right. I think a lot of them are doing it for short-term purpose. Evan, you have a market update?
Yeah, I don't know if we had any more thoughts on that and if anyone wanted to add to it. But yeah, I just wanted to go through and kind of take a quick update on how the market was doing today. So yeah, it definitely has moved lower. The tech and the NASDAQ QQQ is leading the way lower. It's down about 2.1%. It's up a little bit off what its lows were, but not very much. It's very close to it. The Dow is down about 0.9%, and the S&P 500 is down about 1.2%. I was preparing to talk about how crypto was moving higher while the market was moving lower, and how maybe it's not super correlated. But then I went to double check and see what Bitcoin and crypto were doing, and it's moving lower again. So the argument that crypto is not correlated to the stock market, I think, is crazy. I would love to hear some thoughts on it. You can use it as a question, Wolf. I don't know if you had anything else planned or yeah, but
yeah, I was sad to see it fall because crypto was holding my portfolio up today. I have my only green stock is Tesla, but because my crypto was in there, I was only down about 0.5% today until crypto just did a little dip there. I also saw Melanie in the crowd requesting to come up, and if she's here, she should come up, and because she bought SQQQ. But I don't see her up here. I think she requested for just a second.
I think you got a good question in there. I would love to know everybody to maybe what stocks in their portfolio are up right now.
Oh yeah, Peter.
So guys, let's look at the S&P 500 428 level again. The second time a stock hits like that, hits a technical, it's a little weaker than it was the first time it happened on Friday. But right now, we just saw a beautiful pop off that. 428 was a beautiful technical support level once again. It broke through a little bit. To remind everyone never to average into a bad trade, but if you're getting into a double bottom like that or a technical spot on the S&P 500, you just start buying. Your first entry should be your smallest amount. You can go in 2 times, and you just saw a pop right, a really beautiful, quick pop. I'd be out of the trade already because I'm not sure what it'll look like going forward. But these levels are so important, and everyone needs to be, if you're trading, you're doing one thing. If you're investing, you're doing another, and they should really not be crisscrossing, right? Your whole psychology behind it, the posturing, the way you're doing things, the way, how much risk you're willing to put in it. And I agree, leveraging in this kind of a market is crazy. But RSI is so pivotally important. Technicals are super important. Risk management, guys, is the key. It's probably the most important thing that we teach, which is putting a stop order in and having a plan every time you get into a trade. Have a plan on how much you're willing to lose and have a plan on getting your out. Nobody got broke taking a profit. You should have a plan on how to get out of the stock the minute you get in it, on the long side or the short side, right? As a day trader, that's what we do. We make singles and doubles. Stock sets up, you get in around the 428 level in the S&P. It literally just happened, right? You put in a stop at 427.50. and you start taking profits at 428.50 and you scale it up, you raise your stop up, and you get the most out of your trade. You get the least out of your losses and the most out of your positive trades. That's it. Technicals really are working. Price action's really working. This market, guys, Jessica was talking about these huge vacuums, these gaps in stocks. And then when stocks gap up, they will also gap down. And trying to figure out when the gap is going to fill in is really dangerous. I think it's really important for people to note that so many of these stocks, whether the UPSTs or whatever, that gap up, that were sort of dead weight for the longest time, and they gapped up just because of hype for no particularly really good fundamental reason. Well, they're eventually going to run out of that gas when the hype stops buying them, and they're going to start falling. And just because the stock went from 80 to 130, it's not suddenly a great buy at 120 or at 110 or at 100, guys. These gaps are massive vacuums of people buying stocks for no reason. Uneducated traders getting into a stock with a FOMO concept here, right? Look at how the retracement works, and let the technicals determine and the RSI determine when you want to get back in these names. We saw it in AMC. We saw it in GameStop. It went from 20 to 483. We saw it in AMC when it went from 20 to 40 to 62 that day a couple of months ago. It traded after hours at 75, and then it gapped right back down to 40, guys. When you have stocks making these massive gaps because the internet is advising 40 million traders on getting into stocks for no fundamental or technical reason, they are eventually going to run out of steam and revert, right? And just because it got up to 130 and it got back to 120, 110, 100 doesn't mean at a 20% discount it's time to get in it. That's throwing a dart at a board without any information, any tool, guys, right? You need to learn where these stocks, the probability that these stocks are going to stop going down and start going back up again, or the reversal on a short trade. And that's the technicals. That's the moving averages. That's the RSI. That's the pivot points. I beg you all to check it out because it's dangerous. These are dangerous moves. You can get, if you don't use stop orders, you're friggin' nuts, guys. If you're not using technicals, you are really at the risk of a market because stocks are going up and down for no particular reason, except you've got the internet advising 1 million people on stuff. That's craziness, right? And you're going to get hurt. I don't want people to get hurt. Everybody, there's millions of people now who've been invited to this party. Everybody with $100 and an iPhone can trade. I'm so happy. I've never been so happy in my life. We have 40 million new traders. The last thing I want people to do is come here, think it's a get-rich-quick scheme, think they've got diamond hands because they got a couple of winners, right, and get blown up. I don't want that. I don't want you all to get drunk and leave the party and be all pissed off. I want you all to have fun, be profitable, right? Be successful at this. This is the greatest thing in the world, man. The greatest stock market in history. So that's it.
Well said. Well said. Absolutely. Trading with a plan is the only real way. And I think a lot of people, I would gander to say, do not use stop losses and do not use technicals. So I think adding those to your repertoire can only be helpful. There's a lot of free services that'll teach you them, YouTube chiefly and several others. And, adding those can go a long way. So even if I feel like a lot of people, they buy a stock and they're like, wow, I really believe in this company. I think it'll do great. I don't mind holding it through a drop. Well, you can always add back, right? You can always add back at a lower price if something was to happen. But having those precautions in place can really stop something crazy from happening, on a day like this where your stock could fall 6, to 10%, especially in some of these growth names that I'm seeing that are really down in that range. So it can really be helpful. So appreciate, Peter, always pushing for that. And of course, not just pushing for it, but then, going ahead and educating people with your service, which I'm sure they can check out through your information with Wall Street Global Trading. Now, real quick, Evan, I want to go back to you, but before I do, we have not really talked about our trade of the week section. So I'm just going to speak about that for a moment. So for anybody who's unfamiliar, each week on this space, we do try to place a option call or a trade of the week. That is sponsored every week by Bullish Rippers. They're the green raccoon that is up here, the speaker next to us. We'd love if people could follow Bullish Rippers. That account is run by Evan, Stock Market News, so that it's good information as always. And what they do is they give us about $500 a month in order to go ahead and place these trades. Our first one for this month, we put a good amount of money on Facebook at a call option that was a $455 call option for a 360 strike at 10.15. That lost bigly last week. However, we did sell it on Friday and we did come out with about $150, $160 at least from it, which we probably would have lost all of that today. So at least there's the silver lining. So we do have still probably about $200 to make another trade with. So I think, we can eye this market. I don't know if we're going to place that trade today, just because, we might want to see things shake out a little bit going into tomorrow. But Evan, just any thoughts on, trade of the weekend and what you were saying before?
No, yeah, definitely. I'm glad we can come to this, and I'm glad you brought it up because I would have forgot. So this is really great. So I am just looking at the market, and the down day is accelerating. Your instant reaction is it time to buy puts? And then my counter instant reaction is, well, it's already moving down. Is it too late? So I do think maybe we have to let it shake out a little bit. I would love to. I mean, we talk about using all your resources. We have an amazing panel up here. I would love to get some people's opinions about, maybe if we should be looking at a call here, or maybe it's just time for us to sit on the sideline for a week, let the market shake out, and come back with another trade next week.
And in addition with that, and I'll throw that over to you, Ben, first, if there's anything that's on your radar, because we're just eyeing stuff. Somebody also asked, and, Peter, you can maybe answer this first, is how do you decide where you're going to set your stop losses?
You asking me that?
Yeah.
It really depends on the price of the stock. You know what? Usually in a $50 stock, it's 50 cents. In a $100 stock, it's $1. And going higher, it's a matter of how much you're really willing to lose. You don't want to put in a stop order in a $50 stock, you don't want to put a stop order in too tight, because you're just going to keep getting stopped out, right? So, stop order down 50 cents on a $50 stock, $1 on a $100 stock, 10% seems to be a number. And then look, the way we do it, we're really very strict on the information and the protocol we use for risk, for stop orders and for taking profits. In a $50 name, I have a 50-cent stop and I start taking a profit up 50 cents. Then I raise myself back to even, so I never turn a winning trade into a losing trade. So much part of technical analysis is really building confidence in a new trader, that they know where their risk is, so they know what they're going to lose. And then once they start making money and raising their stops up, then they can really play with the balance of the trade, and that they can get that confidence. This is a muscle. Day trading and technical analysis is a muscle that you need to learn. It's a confidence. You need to be really adept at your keyboard. If you need to, trade virtually for a little while and get adept at it. But there should be a plan of entry and a plan of exit in every single trade. When you get into a trade, you should have a reason you're doing it, right? Look, if you're an investor, an opinion on a stock, long-term guidance, earnings, what they're into, it's a good deal or not, that's fine, that's good. That's a different game than what I'm talking about. From a day trading perspective, we're here to hit singles and doubles, protect our downside risk, start taking profits the minute we can of 50 cents, raise our stops up. And then let's say you buy 100 shares and you sell half of it up 50 cents, you bring your stop up to even, that trade will no longer ever be a losing trade. And then if you want to peel out, I mean, everybody's got their own. Some people trade 10 lots, 100 shares, 500 shares. I don't know what your risk portfolio is, but once you've gotten that confidence, that's with the tag end of your order, you can keep raising your stop up as long as it's a profitable trade, and get as much out of the winners as you can and lose the least on the losers that you can. And that's the kind of thing we do. On a $200 name, look, traders may not want to be trading a Myrna. It's a big mover. It's a highly priced stock. Surely don't want to trade a Tesla. But you know what? I don't know who's on this call. There are people here who have portfolios that are sizable, and they've been doing this for a while, and they're adept at it. They're trading 1,000-share lots. It's a matter of how much you really want to lose. I don't want to blow up accounts here. I want to hit singles and doubles, set a target on how much you want to make on a daily basis. Guys, I beg you all to go check out Wall Street Global Trading Academy. Check out the website. We mentor, we coach you. I've been doing this for 35 years. David Green is my partner and teacher, and he's really good at this, guys. A lot of people do technical analysis, right? But not everybody can teach it, right? And so that's why I partnered up with David, because he's an amazing teacher. He's trading the markets live. Go check out Benzinga Monday, Tuesday, Wednesday. He's there trading the markets live on a daily basis. The price you put in your stops is super important. You don't want to keep getting stopped out on the upside and the downside, because then you're just sort of washing your account. But 10% is sort of a good gauge.
Okay, very fair. These markets continue to drop, and crypto is now dropping with them, which is interesting to see. So maybe there is some. So I'll throw it over to you, Ben. We talked about kind of our trade of the week. Is there anything that maybe stands out to you as a potential trade of the week opportunity?
It's got to be
lots to put on your shoulders.
It's got to be oil. I mean, that's what's green every day. What keeps going up? Those are the groups. Oil and gas. Just following that trend, higher every day. And there's groups of names. And you were talking earlier about leveraged, whether it's Gush, ERX is another one. But when a whole group is moving like that, you have to pay attention, because there's a huge shift going on there. And those companies, if you look at the fundamental side too, it supports this move. They're going to make a lot of money. There's a lot of earnings going when oil is trading 70, 80, 90, wherever we're headed. So there's a fundamental reason why these stocks right now are leading the market. And to be honest, there's not really much. You can't really hide anywhere else. To me, it's cash or energy. Like that's really it. Energy seems to be the one that is getting the most money flow. And like I said, there's a lot of choices within that group. But right now, on the whole, and it depends on your time frame too, because if you're, like Peter was saying, if you're a short-term trader and you come in on the technical level and buy the bounce with a tight stop, that's working too. And we love volatility because that can work great in this market. But if you're thinking bigger term, swings and positioning, yeah, oil's about it. It's about the only green that I have on my watch list.
Love that. I'm going to come back to you on that in just a second. I know that Peter is on a bit of a tight schedule and he has to run. Peter, would love to hear any last words from you.
Thanks so much, Wolf. It's really good to hear all of that. This S&P 500 trade, guys, because we had talked about what happened on Friday, the 428 level, and I just discussed that it hit 428 a second time, and I also said that the second time it hits a technical like that tends to be a weaker signal. There was a bit of a pop, but that's a perfect example, and in this market, where my opinion, what I think the S&P is going to do doesn't really matter. It's a matter of the technicals. There was a short trade, then it rolled right over and went even further and lower. So I beg people to check out the price action. As I said, if you're an investor, technical analysis can be helpful about getting a good entry point into a trade long term. But you can use fundamentals, you use whatever you want. From a technical point of view, this volatility is extraordinary. And I appreciate Ben talking about the energy sector because there's so many offshoots of it in equities per se and net trading the energy market in general. But then again, you've got what's going on in China. You've got a lot of potential news that comes out in so many ways, guys, that can dislocate any of these trades like that. And that's why I beg everybody to use risk management and use stop orders in a big way. It's going to be a volatile week, right? I'm going on Neil Cavuto after the close. I just got asked to talk about the inflation story and the supply chain story. Look, there are so many moving parts to this market right now, coming into October. And it's going up against fresh money coming in, but it's going up against Fed news coming out, seasonality, China story, energy story, reopening trade, volatility, virus vaccine. It's a plethora of information coming out and potential news. And to have an opinion from a short-term basis right now is a dangerous thing to get your hands on as a trader, because you can turn a winning trade into a losing trade, guys, right? You do not want to spend the next 3 or 4 weeks trying to get back to even when you've been on a really good roll. So, follow the journey, follow technical analysis, whether you learn it from me or anybody else. It's not an easy game, but it's simple. It's a matter of learning new habits. It's a matter of risk management, stop orders. It's a matter of getting a plan to get into a stock and out of a stock and make money to live to see another day. I love you all. I'll talk to you soon. I got to run. Thanks, Wolf. Thanks, Ben, Jessica, everybody. Melanie, sorry I didn't get to hear you. See you soon.
Have a great day, Peter.
Take care, Peter.
Bye, guys.
I think I'll be back with Peter on Spaces. I think tomorrow we're going to do one at like 4 p.m. EST, if I'm correct, and that's going to be a space covering, that's going to be talking about some NFT projects that Peter's been working on. Okay, so we're just going to do, I think, a few more minutes here because there's 300 people in here and it's a crazy day in the market. So I am going to get around. Juicy, did you have a comment?
No, I just want to say, well, again, welcome me back. Thanks, guys, for having me. Number one, I'm sick, guys, so like my voice is going to sound kind of weird. Crazy weekend. Now, getting into the day, everything Peter just said, I want to agree with. Last time I was here, I was talking about volatility. 428 was the level. My level was 42738. It's pretty much the same area. Technical analysis works in that way. It's a little couple cents off. It's never really the exact level. Today, walking in, all trades called out hit. I was short Square, Roku, Afrm. These are my big three. Pretty much in and out. And with this upcoming volatility, I highly urge that everybody needs to identify what kind of trader you are, right? Are you a day trader? If you're a day trader, you're in a trader's market. This is the time to get aggressive in and out on the same day. All my long-term investing guys, you need to be focusing on where the value's at and where the money's rotating into if you're going to be playing alongside, or you need to be sitting cash. Like a lot of people forget, that as an investor, you really don't have to be inside a trade. You really it mind boggles me that people really need to be inside of every cent of the market move, and that's not how it's supposed to be done. You need a trading plan in this current market, and the way my plan lines up in and out, I'm sticking to high volatile moves, breakouts, breakdowns, in and out, same day, pretty much cash every night until we can get back above 437.37. But until that happens, I would expect a lot of volatility in the next coming days. But that's it for me.
So are you just completely, I guess, what percentage of your portfolio are you moving into cash,
So
at the
my
end of each day?
long-term portfolio is still there, and I didn't clarify that out. That's my fault. I'm a day trader. I have a day trading portfolio where I day trade options on, and I have a long-term investment portfolio where I buy and collect shares. So my long-term, I have some SoFi. I have a huge position in SPY. All of that stuff, I'm not buying or touching anything because I do think over the future, those stocks are going to go higher. I just think that we might see a downturn right now. Me as an investor, my time horizon is 20 years. So I'm going to be inside these companies for a long period of time. Now, my day trading portfolio, I'm 100% cash right now, every night. Every night I'm not playing around, 100% cash.
Got it. Makes sense. Okay, and also, I'll come back to you in a second, but I see we got Melanie up here. Melanie, I was hoping you'd come up. Do you want to talk some SQQQ or some other stuff?
Sure, yeah, I'm happy to talk about SQQQ. So I know a lot of people are super technical and using a lot of TA, where I'm a little bit less TA, and this might be like counterintuitive, but I think I would be apprehensive in using a lot of TA right now because there's so much news coming out, as everyone said, that obviously, we're super volatile, but the markets are not always 100% rational, especially right at first. Like, you could see last night on Twitter when the Hobson news came out, people kind of interpreted that as bullish at first, and like Chinese futures reversed. But I think you need to just take a step back over the next couple weeks and take a beat and really interpret the news that's coming out, because some of the numbers are impossible to ignore, right? Like 30% of China's GDP is real estate, okay, and then 2% of that GDP is Evergrande. Evergrande now is essentially just valued at 30% of what it's worth. That's taking a huge hit to China's real estate, which is, obviously such an enormous part of their GDP. And on top of that, they have blackouts going on right now. They have obviously major supply chain issues. So, yeah, I think that it's important to establish, like, are you trading short term or trading long term, like we've said, but also, like, make sure you're doing your own thinking on, like, all of the chain reactions of how each one of these, like, news bits are really going to affect markets.
Yeah, that definitely makes sense. So with SQQQ, I mentioned that to Jessica, that someone said they bought SQQQ, and she had mentioned, betting against the Nasdaq's not always a great idea. It's very powerful. Is that a short-term hedge for you, or is it something that you're planning on holding for a little bit?
Yeah, I have like long-term, mid-term, and short-term hedges, basically. I totally agree with Jessica. Like, it's 3x leverage. Like, it's not a safe option to be in, but that's because SQQQ, I very rarely hold it overnight. I don't think I ever have, to be honest. SQQQ is a day trade that you want to trade off like immediate news. So I'm in it right now. It's popping off. It's like over 7% up, but it's definitely not something that I would hold overnight.
Okay, definitely. Got it. Appreciate that. So I want to bring it back real quick to this trade of the week. And also, earlier in this call, we talked about this account at Nancy Tracker, which tracks Nancy Pelosi's portfolio. And they just posted that they got blocked on Twitter by the Federal Reserve. So I think that's pretty hilarious. They just posted the screenshot of the Federal Reserve block. Pretty interesting. But Ben, I want to bring it back to you. So we were talking about energy, which is really the greenest sector right now. And I'm looking at names like EOG, PXD, XOM, CVX, and then of course we have things like Gush and COP. Are there any names in particular that look to you like maybe they have a better setup than others?
Matador, MTDR. It may be a little extended now, but that one, I was watching that one right around 38. Now it's trading 40.50. But that was one that I really liked. One that I was sharing last week. One that hasn't really made the big pop yet, LPI. I mean, it's had quite a run off the bottom, but 92.34 is a level I'm watching on LPI. It's trading 89. So that's another one that I've had kind of up high on my watch list that hasn't really broken
Is that
out
a
yet.
cup and handle?
Say again?
Would you say that's a cup and handle? Would you say that's a cup and handle for LPI?
It's definitely a cup, but that handle, it's technically we like that handle to be a little longer, a week. So if it puts in a couple more days sideways action before breaking out, I would say that's the case. Right now, only 4 or 5 days. I kind of like to see it go sideways a little bit more. But the other thing you have to keep in mind, a lot of these in this group, they haven't formed handles. They've just broken out. They make what ends up happening a lot of times is they put that handle in higher, what we call a high handle, and come in and kind of flag higher. I'll give you another example, OVV. This was another one that OVV 33.46 was the level. Looked like it was putting in a handle 4 days, and then now today it's up, 4%. It did not put in what we would consider the traditional handle moving sideways. Give me at least 5 to 7 days, even better if it's 10 days or a couple weeks. But again, it's a sector that's super hot, and today it just broke right out. So that's why I kind of, on YouTube, I was putting the weekly watch list together, and I'm saying, these names would look great if they put in a little bit more of a handle, but if oil's hot again, they're probably just going to go, and that's kind of exactly what's happening. Is they're just breaking out to new highs again.
Okay, definitely going to keep our eye on the oil area. It does look bullish. Evan, any thoughts on that?
Sorry, I had to go out of a tweet. Oil definitely does, interest me. I think that if we were going to do something like a gush or whatever, leveraged, like obviously no options or anything like that. I don't even know if options do trade on that, but I would be down to throw a little bit of money, like $100 at a leveraged oil ETF. Yeah.
They do trade options.
Yeah, okay.
This is how insane our world is. You can trade options on double leveraged oil
That's
ETFs.
crazy. I don't want to touch that.
Yeah.
Please no.
Yeah, the market is fascinating. Really, really interesting times in it. Okay, Juicy, real quick, want to bring it back to you. If you're open to talking, I know you're not feeling so great.
Yep.
First off, happy late birthday.
Thanks a lot.
And yes, sir. And second of all, what are you eyeing in the market today? Any specific names?
I am pretty much cash, man. It's more for me. Like I'm in full on day trader mode right now, in out. So today, going into today, my top was Square, Roku, Afrm, and AMC. They all hit my short triggers. I've already got in, exited. That's pretty much it for me. I'm watching SPY. That's where I'm at right now. I want to see if we get the close below the 428.30 level. I'm sorry, the 427.30. Anything below that, it's like I'm zipping up my bear suit. And I'm going to be ready for it. And I know there's a lot of news coming on, but me as a short-term trader, me as a day trader, I don't pay attention to the news, man. Honestly, I very rarely pay attention to the news. Like this whole Evergrande situation, I wasn't even worried about it, right? Because the majority of the time, if it hits this level, I have a plan to enter and exit with limited risk. So my advice here to everybody is manage your risk, trade your setups, and you'll be okay.
Let's touch on Afrm right there. It's still falling. It's now down over 7% on the day. Is that something that you're still eyeing?
So me personally, I want to, believe it or not, man. So this is where my types of strategies like go against each other. So my long-term investor in me wants to see that gap fill at 92, right? Anything between 102 and 92, I'm going to be looking for some type of reversal to buy. Believe it or not, in long term, like actually getting some shares and hold it, because Afrm's business model, Afrm's very solid fundamental company. I really like it fundamentally. But me as a day trader, it breaking that we had a trigger of 113.49. That's what we got short at. Breaking that level, and then on the weekly breaking that same level, you got room to the 102 level. So the way I'm looking at it is pull back to 102. Or to 90 in that area, and then be looking to buy off any type of reversal pattern, some type of hammer, maybe a weekly hammer gets formed, the price breaks above that. Maybe I have no clue, a reversal of an island and a gapped up, some type of price action that says go higher. I'll be looking to buy long-term Afrm. But I'm pretty much right now bearish. Price targets 102.
Got it. Real quick, before I go to you, Melanie, I brought up, is it Dana or Dana? Just seeing if you had any comment.
Dana. Well, first, appreciate everyone. The dialogue is really rich this morning. I highly encourage everyone to follow all the speakers. I wanted to just put on their radar one particular stock, I'm incredibly bullish on. It's green energy, obviously. Standard Lithium. They have a commercially viable product. They have a proprietary process for extracting lithium. And I think it potentially could be our strongest domestic play. It's based in Arkansas, and they're literally just waiting for the green light to start selling. Its market cap, it's incredibly undervalued. I think it's trading at like 1.5 times its revenue. And just do your due diligence on it. Metric ton of lithium is trading around $24,000, and they're projecting to produce like 24,000 metric tons this year. So, and their CEO Robert Mintak was just on Kramer last week, talking about how he's going to do a huge kind of press campaign over the next 2 weeks. So, I suspect that they're going to be announcing any day that they'll be selling lithium, and I think this stock could be a multi-bagger personally. But appreciate you guys.
Thank you, man. I appreciate that. I appreciate you coming up and giving us, what was the ticker one more time?
Oh, sure.
Yeah, that's
the company is Standard Lithium. The ticker is SLI.
All right. Thank you, man. I appreciate you coming up and giving us in on this. If you guys want to check it out, I would just like to add quickly on this type of stuff is like, I think Peter, who we had up here, was talking about it. Like, a lot of times you don't need to jump into the stuff before the news happens. There might be a big move that comes after it or before or whatever. But generally, I'd much rather have people wait until they start selling lithium or they start doing this stuff as opposed to just talking about it as a maybe. Because I feel like what this market will teach you over time is that maybe turns in, it might happen, but if it happens 2 months after it's supposed to, or even 2 weeks, sometimes the stock could take a big hit. So what I would just throw out there on this name or similar type names and in general is just let stuff come out first and then make your moves around it. That's from a long-term investor perspective. If you're a trader and you have your own type of strategy in there, moving in and out, doing whatever based on technicals, then you can go in and do that. But I'm speaking for those long-term investors. Let news come out. There's no rush. Like what I've noticed, a lot of people, maybe it's just a FinTwit thing, but it feels like a lot of people talk like this is the only time you're ever going to get this, or this is like a once-in-a-lifetime opportunity in the stock market. And the truth is that doesn't happen that often. Like there's only one once-in-a-lifetime opportunity. There's thousands, hundreds of thousands of big, massive opportunities created every single day. And you don't have to jump in at the first thing. You can wait, take your time, and if you miss it, you miss it. A lot of the times you'll get an opportunity again in the same name at a lower price, and you'll be very thankful you didn't chase it higher.
I'm interested in the lithium stuff. First off, Evan, is my sound quality okay? I got a couple messages.
Yeah, Spaces is always glitchy. It's pretty good for me right now. I've had a couple times where it comes in and out, but overall solid.
Okay, because I'm off of Wi-Fi right now, and sometimes when I switch onto the Wi-Fi, the space cuts, and we had one crash last week, so I didn't want that to happen. And please, Spaces, God, don't crash. But I'm interested in this name a little bit. I'd love to hear Ben's thoughts on it as well. So that was SLI. It's an interesting run up.
You should Google.
Yeah, go for it.
You should Google the Smackover Formation. It's this region that they're located in Arkansas. They're sitting on a huge deposit of lithium. Like 1 million years ago, that part of our country was, underwater. And so there's a lot of brine, of which they have this extraction model that's eco-friendly. They're able to pump it out of the ground and pump it back in at a smaller footprint than your traditional, conventional, hard rock mining, where you have to dig a huge hole. And I also like the geography of it. They're like a couple 100 miles away from a lot of automakers and EV companies. So again, do your your due diligence.
Absolutely, and appreciate all the comments on the dialogue as well. Real quick, I brought up everybody's favorite Gavin, who I'm having fun in your really active Discord today. Really interesting. What's been your day like, Gavin?
Pretty good. So I made no trade so far, but I'm watching Tesla. So right at open, almost 4 million was spent on 800 calls. That's what they went in the money. But something very, very interesting. Right after that, around 8:40, someone spent 4 million on ARC puts expiring in 2 weeks. And those were in the money, I think around 110. So someone expects Tesla and other ARKK stocks to take a tumble. Even now, right?
What?
Yeah, go on, Evan. Or
no, you're a big SPY guy. So what are you watching with SPY?
so SPY, I think last time I checked, it had a double bottom. Let's see if it bounce back or not. Here we go. Yeah, it is bouncing back. So same thing, right? Even last week, every single day you see a dip around 10 and bounce back around 11. Same as mRNA. mRNA and SPY, they love to change course just around 11 o'clock. Even if you go back 2 or 3 months, go on any single random day, pull up the chart, pull up mRNA, and look at 11 a.m. what happens. It's usually the peak or the bottom on the dot. I think SPY bounces back and closes down 20-30 basis points. So right now it's down 1.3%. So I think around 4. It should close around 1.3 or 20 basis points. But Biden is supposed to speak in 2 or 3 hours about the China deal and debt ceiling. So all depends on what he says right now.
Okay, interesting. Yeah, I see some people talking about that inside of there. Ben, also, first off, thanks for hanging out with us for like 2 hours here. I hope, if for any of the speakers, if you do have to go anytime, like Juicy just had to go, feel free to drop me a message. We probably won't go way too longer, but, we have now like 370 people in here, and the market certainly has opportunity within it. There's certainly a bit of fear, which is always nice. I did want to check out the Fear Greed Index actually from Captain Solutions. We did a space with Captain Solutions last Wednesday, I believe, and they have a tool with, I guess they call it the Fear Greed Index, and I'm just pulling it up right now, and it looks like, yeah, we're in fear. So that's typically, shows a really cautious market. They're just gauging AI sentiment across, typically they use Twitter, and it looks like we've moved more into fear, but we're not at the highest fear points that we've been, but we've certainly not been near greedy for a little while now. We haven't even got into, they have like different gauges like confidence. So if you search Captain Solutions Fear and Greed Index, you'll see what I'm talking about. And I certainly would recommend taking a look at that. All right, Ben, wanted to bring it back to you once more and just see if, as this market's continued to move, I see a little bit of a bounce right here for some of the stocks. Greg just mentioned, the pullback with the S&P 500. If you are planning any entries, or I don't know if I've asked you if you've made any actual trades today.
No, I haven't made any trades today, just watching, spending the morning with you guys and just keeping an eye out. 0.96, we were talking about the fear gauge. I watched the put call ratio. That's not extreme. I mean, it's fear. We've already seen readings, 1.12, 1.14. Those high readings tell me that there's plenty of fear in the market. What we haven't seen, we were hoping was Friday, was putting in a price momentum low, and we've taken that out too. So that's what we still need to see, is a price momentum low, and then whether that comes as a new low like we see today, and then an upside reversal, or maybe we need a bigger flush, lower. But yeah, cash, definitely heavy cash. Haven't done much as far as today. I do have a few positions on Tesla being one of them, so I'm watching that carefully. Kind of disappointed that it pushed above 800 but wasn't able to hold it. But at the same time, I feel like it's a general market that's definitely weighing heavily on it. So may trim a little bit and then see how it closes and how the market in general closes. But I'm also one of those that really likes to use the close rather than a Monday morning open. In other words, the end of the day, the end of the week, the end of the month, always more important to me compared to early on a Monday morning at the beginning of the month, at the beginning of a week. Hope that makes sense.
Can I just hop in really quickly and say, Ben is really, really close to 100,000 followers. You should check out all our speakers up here, but check out Ben, give him a follow, help us close that gap. He's less than 900 followers away. Let's make it less than 800 or less than 700 by the end of the spaces. Just check out his page. And Gav, I'm sure you had a real answer to that.
And I'm going to be at a conference this weekend, FinTwit conference in Orlando. Would love to have 100,000. So that into the week, that would be great to get to meet some of those 100,000 in person this weekend.
Yeah, I'll be there myself. Just for anyone who's unfamiliar, highly recommend you take a look at FinTwit Conference. That is going to be FINTWIT2021.com for all the information on that. That is going to start actually this Friday night with a cocktail party that's in Orlando at the JW Marriott and the Ritz-Carlton. Ben is one of our honored speakers. Wolf Financial is one of the media sponsors for that. So I'll be down there helping to run some of the different stuff that's going on, helping with like registration and things like that. But yeah, it's going to be a fantastic weekend. We've got several speakers with massive and fantastic audiences from Twitter that are going to be there. Jonah Lupton is going to be the main host, so take a look at that if you haven't already. It's not too late to come. If you decide that you want to come, you can still get hotel rooms, you can still get a hotel nearby, whatever it is. We would love to have you there, and I'd love to meet some people there. I'll probably be buying Ben a drink. We'll have a pool party, I think, on Saturday. So Ben, I'm good for at least one of your drinks.
Looking forward to it. Can't wait.
There we go. Jessica, I want to bounce back to you real quick. I know that you've been watching this market pretty closely. Have you made any moves today?
I did start Nintendo small. I think I mentioned that earlier. I get it looks like a falling knife, but this I'm looking at for pretty long term. It's not a trade. If you zoom way out to a 5-year chart, it looks like a good risk reward to me. That's not a recommendation. Again, this is not a trade. This is for super long. Honestly, other than that, I haven't made any moves. There are some gigantic candles. I'm not scared, for the record, but I feel like I feel like I'd rather sit tight for the moment.
Yeah, that's pretty fair. Evan, you have any comments?
I think
or any news stories?
So news stories, I haven't seen too much flow coming out. Really, just talking about the down day in general. Comments on that. I'm kind of in a similar boat for my long-term investing portfolio where I'm seeing these pullbacks, and today actually has made it get closer to where maybe I'm closer to action than I have been. But I'm still not sprinting to get into anything at this point. It's just like it feels like we have a little bit more to go. I don't know. I'm definitely. I don't really look to trade around my positions too much. I just kind of look to find really great companies I love for the long term at good valuations and ride them to where I think they're fair. So I'm not really looking to sell, or sometimes maybe I'll go a put, but I'm not really looking at it right now. I am definitely more in that inactive part. But I will say I have tilted a little bit more than I was expecting towards the action side. Still not at it, but getting a little closer.
Yeah, I'm keeping an eye on, again, I put out a tweet where I just asked if anybody's made any moves today, and I'm just keeping an eye on that because I'd love to take inspiration, from the audience. So just continuing to watch what people are trading. I see, things like Tesla, Merck, Palantir. I haven't seen what Palantir has done since we last talked about it. It's still down about 5%, Snap's down about 5%, SoFi's down about 2%. Gerg, I want to bring it back to you. We only had you for a minute. Anything on your watch list for the week that you're open to sharing?
Yeah, so I think the ones I can share is I'm playing Tilly. They have earnings on Thursday. If you look at the past 4 earnings, the average move is around 12%. So we'll play a strangle again, both sides. Expect another 5x on them. So one thing I'm watching is Friday, so it's just back. Right now it's around 950. So if you look at the SPAC, the pipe unlock, the average is 42 days, and today is the 43rd day for this one. And the biggest holder for this is Evergrande, the China real estate company, right, which is about to go bankrupt. The same company owns the biggest portion of the company. So I think when the unlock happens, they should be the first one to dump right now, right? And right now they have no products, no revenue. So expect a 50% decline when that happens. I'm trying to buy some puts, but not a lot of sales on them right now, so FFIE, I'm short that for this week.
Okay, got it. Awesome. I'm going to continue to keep an eye on that, and obviously within your Discord, keep an eye on some of the chat and things that are going on. Okay, so we're going to move into a bit of wrap up just because I'm actually getting really hungry. Now that it's like 11:30 and I haven't eaten anything. Ketosis setting in. Enough people. I actually posted last week and I asked what the best diet is on Twitter, and enough people said intermittent fasting. So we're working on it. Got to get in shape for FinTwit conference for that pool party. But bringing it back to this, one thing I do want to say is for anyone that's unfamiliar with Wolf Financial or myself, my name is Golf Blacksburg. I'm the COO and the head of community at Wolf Financial. We are building what we see as the next level of FinTwit, but built into its own app with a lot of big updates coming there. So that is going to be, I will making some really big announcements about Wolf Financial at FinTwit conference on stage. We'll be presenting there, and I will post those to Twitter as well. So if you're interested in seeing something that might be the next evolution of what you could be needing in your life, make sure that you're checking it out, and that link is in my bio to our app, which is live on the App Store with thousands of people using it every single day. Now, moving into a little bit of wrap up, Jessica, would love to hear if there's any last words, any plugs, anything that you are just going to continue to keep your eye on for the week, or anything anybody should know.
I did just nibble at AMD if anybody is interested. I think this is the third time now I added AMD at 100. This is I'm still building a position, and just $100 is one of my price targets. What I like to do is when the market is strong, I choose what I want to add to at what price, because it is easier to follow through on a plan. Because when things are bad, when the market is bloody, it is a lot easier to follow through on a plan than to create one. So it hit my price target again, and I added again. It was a small ad, but I think it's good, for investing. I think it is a good discipline to follow through on plans.
100%. It definitely is. And I'm also keeping my eye on AMD. I saw Jonah actually bought, I think, AMD today. I'm not 100% sure. Yeah. He said he closed out his HIMX position to buy a similar size position at AMD at 101.75. AMD is now at 145. And just looking at it, there's a lot of interesting support lines over here. I do see the anchored VWAP. If you go back to that June 17th candle, it's kind of sitting right underneath it. So, but yeah, then there's this huge gap of just volume not really being there until 94.45. So really interesting one. Definitely keeping my eye on that. Ben, guest of the day, who spent over 2 hours with us. Amazing. Anything you would like to share?
No, just in general, when the market's in correction, for the traders, mind your stops. Don't let it get out of control. You never know where the bottom is. And at the same time, don't get too bearish. Try to keep a healthy perspective, ready to react. I always say it is better to react to price action than to predict. So just be ready. Build that watch list of the names that are holding up the strongest, relative strength names. Anything at this point, anything above the 50-day, certainly above the 20 or 21 EMA, anything holding up above that is showing relative strength. Those are the ones you want to keep an eye on, because when the turn does come, those are usually the first ones to move into new highs, and you're going to want to be participating in those when the next rally does come.
Absolutely. And also, I like that we got you over 99.2. So another tick mark upwards. And also, Ben has a great blog, I believe a newsletter as well. For anyone that's interested, he's got a couple thousand subscribers on that. So definitely worth checking out. And we appreciate you being on here. Feels like you and Richard Mogman are kind of our pillars, you know, of this space, coming on week
I
after week.
appreciate that. And anytime I'm in the conversation with Richard, he's fantastic. Really, really puts out a tremendous amount of quality content. And to be I only wish I was doing that at his age. Give me a 20-year head start. How far along would I be? He's got a really, really super bright future. Great guy. And he's also going to be there this weekend. So looking forward to meeting him in person as well.
Yes, sir. I was chatting with him this morning about that. Richard also, like you said, will be speaking on stage at FinTwit conference, and I'm sure we'll have him in some of these spaces soon. I think me and Evan are the same age as Richard. I believe. I think we might all be
You
the same
guys have
age,
a fantastic
which is
head
pretty
start
cool.
on some of us. It's awesome.
We got lucky. We got lucky. Right time, right place. Gerg, any words from you?
Nope, I got nothing to say.
Got it. Strong but silent type.
Yeah.
Big brain Gerg. I don't know. Gerg is one of my favorite follows on here. You gotta check him out. He's just undeniably, always entertaining and has a incredible streak of just being right. So there's that as well. Melanie.
First, yeah, I definitely second that about Gerg. Everybody should absolutely follow Gerg. And yeah, I mean, I don't really have much to add. I'm watching the specific terms of the contract with Hobson and Evergrande because that's going to reveal a lot about the valuation of their real estate. Bloomberg also just came out with a really interesting article, basically saying that it's titled "China Hidden Local Government Debt is Half of GDP." So essentially, a lot of their debt they've been hiding, and it's just a shit show. Like there's really no other way to say it, but there's no way for them to avoid a major correction. But yeah, so thanks for letting me join. Best of luck to everybody.
Absolutely. Evan.
Yeah, I appreciate for everyone joining in. Quickly, check out Bullish Rippers. It's the green raccoon. I tweet from the account. Putting a lot of work into that. Give that a follow. But just in general, make sure you give all of our followers, give all of our speakers a follow. They put out amazing content. I know Ben and Peter had to jump off quickly. Ben, you guys saw right there. Peter is Einstein of Wall Street, I believe, or something along the line of that. Or look up Peter Tuchman and you'll see him. So we really appreciate for everyone coming in. You know, the reason we put this on, I say this every single time, is because so many people tune in and listen. And, I get a lot of messages saying how much value you all take out of it. So we really appreciate that. We love putting this on and giving as much information and getting, amazing people to come in and give us this type of information and share it with you guys. So we appreciate everyone coming in, tuning in to our speakers. We really appreciate you putting in a little extra coming up here and giving some great information, even to the people who had to step off. And Gav, we appreciate you doing the co-host with me. Always a great time. Make sure you check out Wolf Financial. Make sure you check out the FinTwit conference, which starts this weekend. And I'll pass it back to you, Gav.
Absolutely appreciate that, Evan. One of my favorite co-hosts right here. I only have two co-hosts, so they're equally big places in my heart. With that being said, I just want to go into real quick. If you're enjoying these type of spaces, we do them all week. We're always on spaces. I'm really ramping that up and trying to just bring as much value as possible. My goal within this community was find all the smartest people, get them into the same room, make it free for everybody to be in that room, and we can all just listen to them. And while I just ask questions, right? Not trying to give too much in my opinion, but just trying to ask the right questions. And that's what I do a lot of on my page as well, is asking questions. So this week, we're going to have this space. We also, I believe I'm going to have two spaces tomorrow. One of them will be at 4 p.m. EST with Peter, and also the Boss Beauties NFT collection. So that's a really cool NFT collection. I think they've already done millions of dollars in transactions, but they're highlighting powerful women around the world. And then at 7 p.m. EST tomorrow, I will have a space. I think Powder and Profits, Ben will be back on that. Juicy will be on that. and several others. And that's going to be all just like technical analysis of the market. So that's going to be at 7 p.m. EST tomorrow. There's just like several big players that are going to be on that. So you're not going to want to miss that. And then I think on Wednesday, maybe, Evan, are we doing the street one again?
I believe so.
Okay, so we'll have a space. I think with the street, we did it at, gosh, did we do it at 2 p.m. last time?
Yeah, it was 2
Or
p.m.
4?
last time. We may change it up. I think 4 is probably the better time, but we'll see.
Okay. Yeah, so we'll do one, I think, with the street and Catherine Ross. She's a correspondent for the street, hosted with Jim Cramer for years. And then Thursday, I think that there's going to be at least a space or two. I'm sure there's going to be Chad spaces at night. And then Friday, we do, I do a 12 p.m. EST space that I'm sure Evan will be on as well, called the Weekly Howl. I just literally bring people up there and just transparently, what did you buy and sell this week? Why did you do it? So you can just come and hear from people who, they do this for a living, what their moves are. And then we always wrap up the week with a 4 p.m. EST space that is the sister space to this one. With that being said, I think we've covered pretty much everything. We had over 2 hours. I believe I have a Wolf intern in here recording the space so that I will hopefully have that to post to our YouTube, to our Spotify for anybody if you missed something. If you want to go back, you didn't hear something correctly, you missed the ticker, make sure that you're following. I will post that out to there, and I will put it also on the Wolf YouTube and Spotify. Our Spotify is called the Market Madness Podcast, and I just post everything on that feed. That's all for now, but again, big updates coming on the Wolf Financial app this week, so looking forward to that. And we deeply, from the bottom of my heart, appreciate all the people that tuned in today to listen with us. It's like a family on here, and we love being a part of it. So thank you so much, everybody, and have a fantastic rest of your Monday, and I hope you have a great and great
Make sure you
week.
follow our speakers, everyone. Have a good one.